Will the market trump Donald? I'll check the economic pulse here and overseas, and I'll rub the crystal ball on what's going on in stocks. I'm Peter Switzer, and I'm mad about Paul being away and Marty being away, and I'm mad about money. Okay, let's check what's going on with Donald and the market. Now, you have to understand this. The stock market is a very good barometer of what they want when it comes to US elections. And in fact, something 20 out of the last 23 election results, the S&P 500 has actually predicted what's going on. At the moment, the S&P 500 does not want Donald Trump as president. And we saw that with Hillary Clinton winning the first presidential debate. S&P 500 was up about 0.64% overnight. Before then, worried about Trump, the market was down. Another interesting little barometer is Master Feng, the Feng Shui master. He thinks Donald Trump will win, and he's got it right for 18 years. Alan Rickman, a professor of history at American University, he actually has a system that's worked since 1984. He thinks Trump will win as well. But there are some indications that maybe Trump is going to be in trouble. The one I liked was consumer confidence. When it's actually over 80, the incumbent government, namely Democrats, tend to win the US election. It's now at 104, so consumer confidence is really up. And interestingly, last night, after the presidential debate, Google showed a map of the states of America where the levels of inquiry, Trump versus Hillary Clinton, were pretty well even. You had blue for Hillary, you had red for Trump. In fact, more states were interested in Trump. After the presidential debate, the entire American map went blue. It's like the Americans are discovering Hillary Clinton for the first time. So a very, very interesting inclination and interest in Hillary following the debate. So I think this is really wide open. Master Feng's a friend. I hope he's right, but on personal level, I hope he's wrong. I don't want Donald Trump to be president, and either does the stock market. Okay, now it's time to take the economic pulse. The couple of things that really got my attention is the CBA does an economy-wide look at sales, judging from their bank accounts, and sales is really at very, very high levels. Then you look at consumer confidence. The ANZ Roy Morgan weekly survey, it jumped 4.4% last week to 11 months. Haven't seen a level like this for 11 months. And when they delved into family finances, how families think about their finances, they are at the best rated levels in 7 years. Very, very interesting development. Now, one of the economic concerns out there at the moment is the oversupply of apartments. There have been a couple of reports trying to suggest that the oversupply of apartments could have serious economic implications. I talked to the author of one of those reports from CLSA, Andrew Johnston, last night on my television show, and even though he sticks by his claims that in Melbourne and Brisbane they're going to have an oversupply of apartments, and prices will fall quite substantially in those two cities for those sorts of apartments, particularly I think in Melbourne and Docklands and around the river and CBD in Brisbane. But he doesn't think it will affect the rest of the house price market because of different supply conditions and all that sort of stuff. So and those reports in the newspapers that suggest that the oversupply of apartments could lead to a recession, he completely disagrees with that. He said it's a possibility, but it's not definitely his base case. So all those recession-linked exaggerations around oversupply of apartments is exactly that, an exaggeration. Okay, let's look at the stock market now. And the stock market has been up over the last 3 months. That's a good thing for Hillary. But the last 2 weeks, it has really struggled as Donald Trump started to make a bit of a comeback. But apart from the US election, you've got a number of other curveballs out there, which I think is going to keep a lid on stocks for some time until some positive circuit breaker comes along. You've got OPEC at the moment meeting, got a pretty negative report. Iran doesn't seem interested in actually cutting supply. That was bad for oil prices. If oil prices go down, the stock market usually goes down. You've got an Italian referendum. We didn't know when it was going to be on. I don't think the Italians knew when it was going to be on. It's now going to be on December 4. if they vote against the proposition in the referendum put forward by the Prime Minister Renzi, it could actually put big question marks over the longevity of the European Union. That would really rattle stock markets if that happens. That's in December 4. You've got the US rate rise, which will come after that December 4 referendum, somewhere in the middle of December, and that will, of course, could be a real stock market spooking effect. We expect an interest rate rise in December, but if Donald Trump wins the election, another challenge for the stock market, the Fed may well ditch the idea of a rate rise in December, which could be a plus for the stock market. So if Donald drives stocks down, maybe the Fed will drive stocks up. Putting it all together, and Charlie Aitken said on my program last night, he said, be careful. He's keeping some cash. He thinks there's going to be a buying opportunity as we go along. 3 stocks were mentioned last night, microcaps that you might be interested in. This comes from Joel Fleming from UBS. One is a little company called Clover. Another one is called OTOC, OTOC. That's a company that's in the mining services area. And G&G, an engineering company. These are 3 microcaps that Joel thinks really has a good outlook. Well, that's it from me. And I'm mad about money, but I'm also mad about Paul and Marty being away. Once again, I'm Peter Switzer, and I'm mad about money.